I'm Spencer Mazyck, and joining me now to discuss Milbank's recent Latin American deals is Marcelo Mottesi. He is head of the firm's Global Securities Group and a member of its Latin America practice group. Welcome, Marcelo. Thank you for joining us today.
Thank you. Very happy to be here.
So, Marcelo, before we talk about your deals, tell me this. Has Latin America's M&A markets shown relative resilience during a time that many would describe as a global slowdown for M&A activity?
Yes and no, I would say. There has definitely been a slowdown, and we see a number of transactions that are on hold or moving quite slowly because of general reticence by people. But there has been also a number of transactions that have gone forward, a lot driven by the specific nature of the companies involved. There are forces outside of Latin America driving M&A in Latin America, for example. European companies and conglomerates looking to create value because of their problems at home by disposing of assets that are quite valuable in Latin America. And we've seen a couple of instances of that this year. And there continues to be, with the growth of Latin America generally, of course, M&A the other way, where a lot of Latin American companies are looking at opportunities abroad in Europe and elsewhere to expand globally.
Does the weaker currency make it more competitive internationally?
Well, definitely, that could cut a number of different ways in terms of pricing, in terms of financing, and that you're going to get into the specifics of each and every deal. But the currencies definitely have a lot to do with it. I would say more importantly, though, on the other side would be the levels of financing, the relative pricing that Latin American companies are able to obtain right now is incredible. And it still looks very attractive to international investors, where U.S. treasuries are at rock bottom, and so are AAA U.S. companies, and all of these international investors are chasing yield. But for a Latin American company that can, in the past, 10 years ago, would have had to look at certainly double-digit yields, and now can do something in the 5, 6 category. Even the strong companies do it even lower. The ability to raise significant amounts of capital at such pricing is very attractive.
Well, and for the areas that are stable and even sort of there's some growth in some areas, does it vary from country to country? For example, is there more M&A activity coming out of some countries like Chile than others? Definitely.
And stepping back one bit, I think one of the most beneficial things that have happened to the Latin American market generally over the last 10 years or so is that investors now differentiate between countries. When I was your age, long time ago, if there was a hiccup in Argentina, the whole continent came to a halt, or a hiccup in Mexico or elsewhere. Now, Argentina still has a lot of problems, as does Venezuela and a number of other problems, and other countries, but there are people differentiate, and so the Chiles of the world, the Perus, and other countries, Colombia, are very strong. Brazil, Mexico, and people will still go in there and not worry about what's happening in the neighborhood generally.
Well, and speaking of Chile, can you tell us about your firm's representation of a Latin American retailer, Cencosud, and its U.S. IPO on the New York Stock Exchange?
Yeah, they are one of Latin America's largest conglomerates. They own real estate properties and retail shops under a number of different trade names throughout Latin America. They're very large, and they're growing at a dramatic pace. And so for them, doing an SEC-registered NYSE listed offering made a lot of sense, which it still does to a lot of the large companies. Over the last 10 years, a lot of companies have actually delisted from the New York Stock Exchange because of Sarbanes-Oxley and other perceptions about liability, the regulatory environment here in the U.S. That is changing a little bit, that perception, A, because people have gotten comfortable with it, and B, because local regulations, frankly, are now rising to levels, depending by country, where they are not at SOX levels, but tough enough, close enough that you have to have the discussion. For Cencosud, it made sense to be listed here. They're of a magnitude that they want to be a world player. And since the IPO, they've continued in their growth. They bought Carrefour's assets in Latin America. They've been able to obtain very favorable financings.
How much money was raised globally for them?
In terms of the IPO raised $1.5 billion.
Okay.
They subsequently did a couple of billion more in debt raisings to do the Carrefour and some other acquisitions. And so, it is one of Latin America's real bright spots. It is a great company, great management, and with incredible global ambitions.
Isn't it also one of 11 Chilean companies listed on the U.S. exchanges?
It is, and there used to be a lot more, but there continue to be a number of Chilean companies. Chile is, out of all of Latin American countries, probably has for the longest time been the most stable, and with an environment of a professional culture that really people have trust in. And so it's a small country, and also as a country that has a very, very strong local market. And a number of the companies are still listed in the New York Stock Exchange, and they're very, very top-notch countries. And the rest of Latin America really, I think, looks to Chile, certainly in the Hispanic-speaking Latin America, looks to Chile as the model that they want to emulate.
There's a lot certainly happening there. And moving right along, though, I just recently got back from Guatemala, which is a lovely, lovely country. But I understand that your firm represented its government in the country's first sovereign debt in a decade. Can you tell us what are the details of that transaction?
We did. They did a sovereign bond offering, which was quite exciting. It is part of a pattern that we are seeing. Central America is not a very large area by any means, either geographically or by population, but it is one of the areas remaining where there is a lot of growth to be had for investments. And so we did that deal. We did another sovereign bond this past week for Costa Rica. We've done a couple of other corporate transactions this year out of Central America. And so hopefully it's a trend.
With respect to the Guatemala deal, though, wasn't the placement there, the originally planned placement, 40% lower than what was actually executed?
Yeah, and they could have done more.
That's what I was saying. What does that say about investor confidence in the Latin American economy?
It's the investor confidence is sky high. That people see, it's two things. People see these regions, for lack of a better term, getting their act together, and wanting to join the global financial world. And it's what we were saying before, a chase for yield, where for Guatemala, what they are paying looks to be really, really attractive, and something for an international investor, what they're getting is very, very attractive in comparison to what they can do elsewhere.
Can you tell us about one or two of your transactions, your recent transactions in Brazil? I know that your firm represented the first ever private credit agreement in one of its states, right?
We did. We just represented the lender in a credit agreement to the state of Mato Grosso. Brazil has a very interesting, I guess, for lack of a better term, financing structure right now in the way that the states have to finance themselves really through the federal government. We were able to put together a structure where for the first time a state went and received outside financing at a much better rate that they were receiving from the federal government in Brazil, and was able to refinance that debt. And that's going to be something going into the next year. We already know of a number of states in Brazil that are looking at to follow Mato Grosso. Another state recently got one approved, and there are a number of other states now that are racing to try to do similar transactions. We were very fortunate and happy to be part of the first one.
Aren't the infrastructure investments there in Brazil kind of necessary as the country prepares for the 2014 World Cup and 2016 Olympics?
The infrastructure need there is unbelievable. I don't know if you've been there, but it's palpable. You walk through, and they have incredible needs and an incredible drive to join the first world. But the need for infrastructure is amazing. We're involved up and down the chain, everything from oil and gas to roads to a number of different types of transactions that are trying to be done there. But, this past year in Brazil, we saw a definite slowdown on the equity markets that went along really with a slowdown worldwide, especially experienced in Asia and in Latin America. But a continued drive in debt markets. And there is a lot of talk, and we've done some, but that the project finance market will now go to the bond market, and we've seen a number of those transactions, what we call project bonds, which is basically a financing for a specific project. Typically, that's done by banks, There was a time during the 90s that we did a lot of those deals in the capital markets and the bond market. And now you're seeing a return to that because the bank market really cannot provide all of the financings that these infrastructure projects need. And Brazil is sort of ground zero in Latin America for those kinds of projects.
That's pretty interesting. Milbank has been very successful in what I would like to call it representing these record-setting Latin American M&A transactions.
You're too kind.
And I'm not just talking about this year, though. So what do you think attributes to your firm's success?
Well, I think our firm was one of the first firms to be active in the region going back 50 years. And we've been able to build on that. Our outlook is to just be the best lawyers we can be, provide the best service. And we layer with that, we have a whole group of attorneys that are culturally attuned to the region, that are either Spanish or Portuguese speaking, and that know the areas and the legal structures and the countries extremely well. There's no learning curve to be had, and we're fortunate to be one of the leaders in the market.
Well, we wish you continued success in the region and other regions, of course, as well.
Thank you very much.
Thank you for joining us today. We appreciate it.
Thank you. My pleasure.
For more information on this or other topics, subscribe to BloombergLaw.com. You can follow us on Facebook and Twitter. Thank you for joining us. Bye, everybody.